Hey guys, it's Damian from Marketing and Food Online. I hope you guys are having a great day as always. Today's podcast, I'm going to give you 5 tax deductions that you need to be aware of for your food business. And we're going to get right to it right now. Okay, guys. All right. So as I mentioned in the introduction, I'm going to give you 5. I'm actually going to do a 2-part podcast. I wanted to break it up into 5 individual tax deductions that can be found for, this is for restaurants and also would include things like coffee shops, cafes, eateries, anything where you've got a consumer or a customer coming in and sitting down and they're going to consume your food product, and you've got waiters, you've got tables, you've got tablecloths, everything that goes along with operating a restaurant or a cafe-styled eatery. These are 5 of 10. I'm actually going to give you 10 of them, but I'm going to break it up, like I said, into 2 podcasts. And then following this podcast, you can check out part 2. I'm going to give you the other 5. The reason I'm doing that is actually I wanted to go into detail on each one of them, and I didn't want to make it a 2-hour podcast going into the top 10 reasons to deduct these items. Now, really quick disclaimer. Of course, I, as you know, am not an accountant. I do not work for the IRS. I do not claim to be any of that as well. I'm simply going to give you some tips and pointers, and you need to bring these ideas, make a note of them if you want to, jot them down, bring them to your account, and then, of course, let them go over them in much more detail. But I'm going to kind of encompass and kind of show you what they are and explain the basics on how they are actually considered potential tax deductions for your business. And if you're looking to open up like a bakery, for instance, and you've got tables and people, again, maybe coming in and having donuts or having some type of baked good, a pastry and a cup of coffee or something like that, these are also can be applied to that. Just double check again with your accountant. And of course, it depends on, there's several other factors depending on how you're filing and such. But definitely something that can be applied to almost any eatery, to be honest with you. So we're going to jump right into it. So these are going to be 5. They're not in any particular order of importance. They're just going to encompass 5 separate potential tax deductions. So I just want to let you know that they're not in some sense of from either urgency to the least important. They're actually all quite important. And to be aware of them, there is a numerous amount of other deductions I'm not going to cover in these top 10. The 5 I'll give you here and the 5 I'll give you on the next podcast are just going to be 10 of them, but you definitely want to go to your accountant. There is a number of different types of deductions, and make sure you take advantage of all of them because they're set up for restaurateurs and entrepreneurs who are in the food business for a reason, and that is to help you make the most of the money that you're actually earning. So let me hop right into it. So number 1, food costs. Now, this may be like kind of a no-brainer, but it's quite interesting how the food costs for restaurants can actually account for almost 40% of your annual budget. It's actually one of the biggest parts, biggest expenses for any food eatery is actually the purchasing of the food itself. And of course, you mark it up and you make your profit, you make your margin, but you want to make sure that you keep track of every little bit of it. And from my understanding, it's actually considered a non-incidental material and supply, not as an inventory when it's actually accounted for. And again, like I said before in the opening, the disclaimer, double check with your accountant to make sure that all of these items are something that you could definitely take advantage of. So the first one, of course, is food costs. Make sure, of course, any vendor you purchase an ingredient from, any outlet, if it's a retailer, if it's a food vendor, if it's a food supply company, if it's a wholesale company like a Sam's or Costco or something like that, make sure you keep all of your receipts, okay? That's kind of something that is really a no-brainer when you're in the food business. And this is for beginners too. If you're relatively new to it, be aware of this, that everything that you buy that is considered an ingredient for a finished food product that you're then going to sell, okay, all of those are expenses, and they're definitely something you need to account for. So keep all of your receipts, keep anything that you keep track of, if it's an invoice, if it's a 30-day net or net 60 or something like that, and you're getting invoices later in the year, keep track of all of them, okay? So food costs are one of the biggest ones, so make sure you make note of that. Now, number 2, this is going to apply really to those who have a staff. If you've got a group of people working for you, you've got employees, and you've got, of course, what's considered labor. The costs for laborers, if it comes to wages or benefits, if you're looking to to pay chefs. So you've got bartenders, you've got any of these types of employees, dishwashers, even anyone who's a part of your restaurant or your eatery, that is labor, okay? And the costs are fully deductible because that is an expense to operate your business. Also, the cost of providing meals to employees. This was something a lot of people aren't aware of, but if you're actually giving the employees as a benefit, okay, if it's a benefit that comes along with working for you and you are giving them a lunch or a dinner or even a breakfast in the morning and that is costing you money, make sure you keep track of that as well, okay? That is a benefit as well, and that's something that needs to be kept track of and can be beneficial for your business when it comes time to doing that. So if you also do like an employee appreciation or every year annually you do this big event or you're throwing something in your restaurant for your employees, all of the expenses that go along with that event as far as the food is concerned and feeding them and such, those are expenses. You need to be aware of that and keep track of them and let your accountant know that you did that so that could be used as another an expense. Now, small wares. This is something that if you're new to the idea of having a food business, you may not be aware of this terminology, but small wares, where if it's glassware, dinnerware, pots and pans, and tabletop items, bar supplies, food preparation utensils and tools, even if it's food storage, keep that in mind as well. There's a lot of food grade material out there that are for large bins and such, where people can store wheat or flour. If you're doing some sugar, if you got powdered sugar, all of these different apparatuses that you're using to store your food, those are all considered small wares. And the expense that you've put out, the money you put out to buy those products, those are considered expenses as well, okay? And small appliances, and this was something that was new to me when I opened up our bakery. I was kind of unaware of that at the time when I first started many, many years ago. But the appliances that we purchased for the bakery, costing $500 or less, that would be considered a smallware expense, okay? Rather than having something, if it's a large investment in a larger appliance of some kind, it's actually going to need to be accounted for as a depreciated item, and that's a totally another podcast in itself. But that is going to be accounted for in a different method. But anything below $500 or less normally will be considered a smallware item. So keep track, again, of your receipts when you purchase all of these things, cups, glassware, flatware, cookware, anything that's like that, okay? Now, one thing you want to keep in mind, this one is actually really interesting and it's really important, and it may be actually overlooked by a lot of beginners when you want to open up any type of eatery, and it's linens, okay? If a restaurant pays for a service that actually can come in that supplies clean napkins or aprons and tablecloths, and they do it on a regular basis, okay? What that's actually considered is an expense, maintaining the cleanliness of those items. So let's say instead of paper napkins, if you're using linen napkins and those are being washed on a weekly basis or every other day or something to that effect, tablecloths, any type of linen that's part of your restaurant. At the entrance, for instance, if you come into a restaurant and you've got rugs, you've got non-slip rugs and such, maybe even in the kitchen where there's food preparation going on, the maintaining of those on a weekly or monthly basis, the expense for that is also, it's considered actually a non-incidental material and supply, and it can actually be, it's up to, this is based on each individual item, up to $2,500 each invoiced year. So, for instance, if you spent $2,000 in one set year, okay, and you were having a service come in and take care of all of your aprons, take care of all of your tablecloths and all of the linens, that is each individual item up to $2,500 can actually be a beneficial deduction for you. So something to keep in mind. Definitely when you're running a restaurant, where you're running a restaurant or an eatery of some kind and you've got those items and they're being cleaned like that, you can definitely use that as a deduction. So I believe that's number 4. I'm going to go into number 5, and I'll wrap up the podcast. But this one actually is going to be insurance. Okay, and let me explain to you the variety of insurances that you would actually need to have. So when me and my wife opened up our bakery, it was actually a pick up and go. We didn't have seating inside. We actually had a place where you can come and get gelato ice cream. You can get yourself a panini sandwich. You can get pastries and cookies, whatever it may be that we had offered, which was an enormous amount of stuff. but it wasn't a restaurant type of thing setting. We didn't have that. It was you come in, you purchase the item, and you can take it with you. Now, what I mean by that and why I say that is that we had insurance. And we had as a restaurant owner or as an eatery, you would need to maintain insurance that would protect your business, okay, from any claims. In case somebody were to get injured on the premises, if you had someone slip and fall, the type of insurance you would need to make sure that you're covered for that. If a customer leaves your place and spills some water and then another customer comes in and accidentally slips, there's an insurance that you would need for that. Okay. There's also would be an insurance for property insurance. And normally, a lot of these policies, not always, but a lot of these policies are written with a lot of variety of coverages wrapped up into it. And then you could pay one monthly sum for it, or you could pay it annually. In some cases, you'd have to buy individual separate policies, but normally a lot of this will be additions to a traditional policy for an eatery. And you would have to add on property insurance, of course, restaurant. So, for instance, the damage, let's say if you had property insurance would cover things like a table, kitchen supplies. If there was a fire that broke out and half of your utensils and pots and pans went up in flames and you don't have the use of those products, property insurance would be something that you would need for, aside from having the insurance to cover in case of the liability claims if someone gets sick or injured or something to that effect. So, anyways, the other thing you want to look for is if your business buys to generate to keep food from spoiling, like during a power outage. And this actually happened to us. We had a truck that ran into our electrical box at our building during our first year in business, which was a really big wake-up call. But the electricity went out and the cord got pulled out, and it actually started a small fire. And we lost all of the gelato that we had, and we had a whole bunch of cold cuts with meats and cheeses in our freezers, and our prep tables, and we lost all of that, and we had to file a claim. We literally had to go down and itemize every single item that we lost, how much of it, the weight of it, everything. It was a huge mess. So the reason why I bring that up is that you want to make sure that your policy covers those types of things. If power outages occur, or if there's a fire that broke out, or something to that effect. And normally there's not a similar policy to one that's written for liability claims, because that's a different type of insurance to cover. But again, these are things that can be added traditionally in a bundle. They can be put together. So make sure you have adequate insurance, okay? And remember, of course, at the end of each year, the amount of money you paid for your insurance, also bring that up to your accountant and make sure that you have the ability to get that deducted as well. And that would be something beneficial for you as well. But keeping yourself covered and insured, please do. That should be on like the number one on your list as far as a priority. I know I mentioned that I wasn't going to do these in any particular order, but I know insurance is something you want to make sure you have the exact type of insurance, okay? So with that being said, I want to wrap it up. That is 1, 2, 3, 4, 5. I believe I covered 5, if I'm not mistaken. I maybe covered more. I'm going to do another podcast on a separate time, and I'll upload that about the other 5 that I would recommend you be aware of. But just keep in mind, in general, just use common sense. Anything that you're putting out, anything that you're purchasing, the money you're putting out, you're laying out for your food business. Keep track of all of it. Bring it to your accountant and say, look, this is what I've put out for this year. This is what I've made. Let me know for sure that I'm keeping track of all of the right expenses, and pretty much almost anything in a sense that you're putting money for to create your food business is going to be beneficial for your taxes. So keep all of your receipts and any invoices that you might have, and make sure you have adequate insurance. So I'm going to wrap it up, and if this was helpful to give you some basic understanding about some 5 super important aspects of opening a restaurant business in regards to taxes, do make sure you give me a thumbs up, and then, of course, share this information. If you have someone that is looking to open up a business, let them know about Marketing Food Online YouTube channel and also our podcast. So I will see you guys on the next video. Take care.